Mr. Boucher, could I start with the mortgage book in the Republic of Ireland? My understanding from the figures are that there's approximately just over 17 billion in trackers in loans outstanding and mortgages outstanding, and just over 10 billion in non-trackers. So with rounding, it comes up to about 28 billion for the Republic of Ireland in terms of tracker and non-tracker mortgages. The figure given earlier for the amount of negative equity was 4.3 billion. Is that 4.3 billion just for the Republic of Ireland?
Yeah, that discloses the Republic of Ireland, Deputy, yes.
Okay. So of the 28 billion in loans outstanding, your estimate is that there is 23.7 billion of real assets at market value against that 28 billion, thereabouts, give or take.
It's a mark in time, yeah.
Today?
Yes. Yeah. Sorry, at June 30th.
At June 30th.
Based on an indexation of the peak to trough loan to value, and which is also based on the origination profile, which we disclose in our June 30 statements. Okay.
So the bank's best estimate at that time is that of the approximately 28 billion in mortgages outstanding for the Republic of Ireland, there are realisable assets at today's market value of just under 24 billion against them.
It's a different thing. It's a measure of the negative equity at a point in time is 4.3 billion. Whether or not that's realisable, if all the mortgages came to the market or not, I don't know.
Well, what is negative? How do you calculate negative equity if not the difference between the amount outstanding versus the realisable assets?
It's the indexation based on the CSO's assessment of the move in house prices. We look at what's the origination time and the amount that was advanced at origination.
Okay.
That's different from realisable value.
Okay, so the 4.3 billion in negative equity is not your estimate of the difference between the total amount of loans mortgages outstanding and the total amount of asset value against those loans.
The disclosure is the negative equity.
Certainly. Can you answer the question?
The disclosure is the negative equity. That's what we do. We don't do a realisable value. The vast majority of our mortgages are being repaid on time. Customers are able to meet their obligations, and a primary assessment of our ability to have the mortgage repaid is the customer's ability. We do not see a correlation between negative equity and ability to repay.
I'm not talking about ability to repay. I'm trying to understand whether or not when you say negative equity, you mean the difference between the total amount of loans outstanding and the realisable assets against those loans. So, if someone has a mortgage of 500,000 and the market value of the property is 300,000, the negative equity is the difference between the loan outstanding and the market value of the asset, which is 200,000.
And an assessment of the customer's cash flow over the lifetime of the mortgage.
Not the negative equity. The negative equity is simply, okay, so what
the current estimate of the customer's ability to repay is the customer's estimate of the cash flow that the customer has over a period of time. The security is a different thing.
So you're saying that when you talk about negative equity, let's take an example of one property to keep it really simple. There is a mortgage of 500,000 against a property that is worth 300,000. You are stating that the 200,000 difference between the mortgage and the asset value is not what you mean by negative equity. Is that what you're saying?
We are disclosing what the negative equity based on the origination of the mortgage and indexation during that time.
I understand. Can you answer the question I just asked you?
I've given you the answer, which is what we disclose in our accounts as negative equity. That's the answer I can give. I can't give any other answer, David.
Okay. Let's go back to the 500,000, 300,000 value. Very simply, would you consider that negative equity in that case to be 200,000 euros? Yes or no?
The negative equity is based on if the negative equity, for example, if we just keep the sum simple, is the 4.3 billion on the book based on indexation across all the mortgages. So therefore, on an individual basis, yes. But the customer's ability to repay is different from the security value. We assess on the basis of a customer's ability to repay. This isn't a pawnbroking business. We're looking at a customer's ability to repay.
I understand, but there seems to be a very very clear difference of opinion. My understanding of what negative equity is, if someone owes you €500,000 and their asset is worth €300,000, whether they are on the dole or they are earning €1 million a year, that asset, that loan, has a negative equity attached to it of €200,000.
Point in time.
A potential negative equity?
Yes, because there's a potential negative equity. That is based on a statistical review of the book.
So when you provide the figure of €4.3 billion, let's stick with our example of 500,000 versus 300,000 market value. Am I right in thinking that you risk assess the ability to pay and adjust the declared negative equity accordingly? In other words, no.
No. We look at the customer's ability. The primary focus we have for all of our lending is the cash flow of the customers.
Okay.
In certain of our products, we have different types of security, and we assess that security on an ongoing basis.
So if someone, sorry,
it's a negative equity. Your view of the ability.
Deputy Matthews, please.
Discloses in the accounts on how
Deputy
the
Donnelly's
equity
position.
figures derived at Deputy Matthews.
let me go back to a single example. We have a mortgage outstanding of 500,000 with a market value against that of 300,000. Is there any situation in which that will not be recorded as negative equity of €200,000?
The disclosures in the accounts is the negative equity across the entire portfolio based on the
Mr. Boucher, with respect, could you please stop repeating the same sentence and actually engage in the question that I'm asking you?
I'm giving you the answer based on our accounts.
Can you give me an example based on a single example?
I'm giving you the disclosures which are in our accounts.
Okay. Can you answer the question I have asked you?
I've given you the answer I can give you, Deputy.
Okay. So you're not willing to engage in a single example?
I can give you the answers based on the disclosures in our accounts.
Okay. Let me try and ask the question in a different way then, Mr. Boucher. Of the €28 billion of Republic of Ireland mortgages, what is the bank's estimate of the market value against that loan book right now?
That's not an estimate that we provide or do. We don't mark to market the book.
You tell me that again. You're saying the bank doesn't have an estimate of the asset value of its domestic mortgages?
We don't mark to market our books.
Okay.
It's a lending book. It's not a trading book.
So you're stating the bank does not have an estimate of the asset value against its domestic mortgage?
We don't mark to market lending books.
Okay. So the answer to my question then would be no. Is that correct? You don't have an estimate?
The answer to the question is we don't mark to market lending books.
Can you put that in layman's terms, Mr. Boucher? For the people who are watching at home, do you or do you not have an estimate of the total value of the domestic loan book?
We have an estimate of the total value of the loan book, which is based on the provisions that we make against when a loan is impaired or in default, and we disclose those provisions. We expect the vast majority of our customers to pay.
Because the listener at home I can barely follow this. I know what the listener at home is doing. Is that the mortgage lend book or the total lend book of the bank?
The mortgage book for the Republic of Ireland.
Okay.
The 28 billion.
Okay, thank you. Mr. Boucher.
But look, it's a lending book. So we assess the customer's ability to pay, we look at the cash flow, we disclose on an ongoing basis if a customer is going impaired, but we expect the vast majority of our book to be repaid. It's a lending book. So it's an assessment of future cash flow, potential future cash flow, security in a default situation, and assumptions made on the basis of that security.
What impairment has the bank got against the 28 billion?
Sorry for a second. $4 billion is the provisions at June 30th.
1.4 billion. Okay. And Mr. Boucher, the last time you appeared before the committee, you told us that the total amount which Bank of Ireland had surrendered in terms of mortgage debt in the Republic of Ireland was €0. Is that still the case?
We don't give the market disclosures.
You gave the market disclosure the last time you were here, Mr. Boucher. I beg your pardon, sir?
We don't give market disclosures beyond which is in our accounts.
Okay, so you're refusing to say how much money, if any, the bank has surrendered, even though you did so the last time you appeared before the committee?
We don't give market disclosures beyond which is in our accounts.
So you are refusing. Let me ask a different question, Mr. Boucher. Is the amount which you have surrendered in your accounts?
provisions against our books.
That's not what I'm asking you. What I'm asking you is the total amount which the bank has surrendered in your accounts? Do you now disclose that?
Accounts provide full disclosure in accordance with the accounting standards and the regulatory standards of what we are and aren't required to disclose.
I understand, Mr. Boucher. Could you actually answer the question I asked you?
The disclosure is the provision.
The disclosure is the provision. Okay, so...
We're going to run out of time now, Deputy.
Thank you, Chair.
I appreciate the responses you're getting from Mr. Boucher as well and assisting you in your time.
Okay, right. So, just for the record, Bank of Ireland, you, as Chief Executive, are now refusing to tell the Finance Committee of the Oireachtas how much the bank has surrendered. You've taken a write-down of 1.4 billion. Deputy Doherty asked you earlier on how much had been... Yes, I understand. You've made a provision of 1.4 billion, of which the last time you were here you said you had surrendered none, and you are now refusing to tell the Finance Committee of the Oireachtas what that number is anymore. That's fine. Mr. Boucher, can I ask you in terms of the personal insolvency legislation that's coming forward? Thank you, Chair. If someone enters into a debt settlement arrangement on secured debt, in particular on the house, if an agreement can be arrived at with the bank, with the personal insolvency professional, with the borrower or borrowers, at the end of the debt settlement period, which the legislation says will be up to 6 years, is it the bank's understanding that the borrower could keep the house and that as part of a debt settlement arrangement, an amount of debt could be surrendered by the bank to the borrower?
It depends on the terms of the debt settlement agreements. It's a hypothetical question. So it depends on the individual circumstances.
So it is possible.
An assessment of the future earnings capacity of the customer.
So it is possible that the bank will engage in debt surrender as part of debt settlement agreements under the new legislation. Is that what you're saying?
The bank's responsibility is to maximise the recoveries it makes from the loans it provides.
Yes, I understand that, Mr. Boucher, and we are in the Republic of Ireland and we can state all sorts of truisms for the record. Mr. Boucher, I don't know what you're doing here if you're refusing to answer anybody's questions. Let me just ask the question again. It's a very important question. Okay, so you are, again for the record, Chair, you are refusing to state to the Finance Committee of the Oireachtas whether or not the bank will even consider debt surrender as part of the upcoming personal insolvency legislation. Thank you very much for your time, Mr. Boucher. It's been most illuminating.